Imagine the entire economy as a tower. Every block represents something stable: a mortgage, a pension fund, a retirement account. The tower stands because every block holds the weight above it. Now imagine pulling blocks from the most secure layer, the one everyone assumed would never move. That's what's happening right now. And the thing pulling those blocks isn't a recession. It's artificial intelligence. 50% of white-collar jobs are projected to vanish within 5 years. Not factory workers, not truck drivers, accountants, analysts, paralegals, mid-level managers, people with 6-figure salaries and 780 credit scores. Your bank looks at these people and says, guaranteed mortgage payment, AA, zero risk. AI is about to make a huge chunk of them obsolete. When someone loses a high-paying job, they don't immediately lose their house. First, they sell their stocks. Millions of people pulling money out of the market, not because of panic, because they need cash to eat. The market drops, which hurts everyone else's portfolio, which forces more selling, but the stocks run out, and the mortgage is still due on the 1st of the month. So now the 8AA borrowers, the safest bets in the entire financial system, start missing payments. And here's what you need to understand. Banks don't just hold your mortgage, they bundle thousands of them together and sell them as investments. Pension funds buy them, insurance companies buy them, retirement accounts depend on them. The whole system works because those mortgages are considered safe, because the people paying them had stable, high-income jobs. In 2008, the housing market collapsed because bad mortgages were disguised as safe investments. The government stepped in, printed trillions, bailed out the banks, called it quantitative easing. It worked. Barely, but it caused inflation and piled on debt. Here's the terrifying part. In 2008, roughly $5 trillion in mortgages were at risk. Today, the US mortgage market holds over $14 trillion, 3 times the size, double the debt. And this time, the people defaulting aren't subprime borrowers who never should have gotten a loan. They're the most qualified borrowers in the system, the ones the entire financial model is built on. So what does the government do? Same thing they always do. Print money, but this time the math doesn't work. If the highest-rated borrowers stop paying because AI replaced their jobs, the losses don't stay in housing. They cascade into pensions, retirement funds, every fixed-income investment on the planet. The government would have to print so much money that just the interest payments on that new debt would consume 100% of federal tax revenue. Nothing left for defense, nothing for healthcare, nothing for infrastructure, just debt payments on money you printed to save a system that was already breaking. And this isn't a prediction about some distant future. AI is replacing white-collar jobs today. Companies are making these decisions in earnings calls right now. The layoffs aren't announced as AI took your job. They're announced as restructuring, efficiency improvements, strategic realignment. But the result is the same. A block gets pulled from the tower. In 2008, the crisis happened because the system lied about who was risky. The next crisis won't happen because anyone lied. It'll happen because the people who were genuinely safe, genuinely the foundation of the entire system, stopped being necessary. The blocks didn't get weaker. They got removed. And nobody's building a new tower.